But managing risk in the cockpit is just second nature, right? But when it comes to managing the financial risk of flying, well, things can get surprisingly turbulent. Let's dive right into this explainer and build a crystal clear flight plan to protect your family's financial future without overpaying. Today, we're demystifying the whole complex world of aviation life insurance. We'll unpack everything from how underwriters actually view your logbook to the exact steps you need to take to secure the absolute best rates. Now, here's a crazy thought. Does your life insurance actually cover you when you fly? It turns out so many of us just assume we're covered. You go through the standard application drill, the agent asks if you do any hazardous activities, and you're thinking, well, I don't rock climb or scuba dive, so no. But standard policies often harbor this hidden risk. They literally lump flying yourself in an airplane right in with those extreme sports. It's a huge misunderstanding, and it leaves countless pilot families totally unprotected if the unthinkable happens in a general aviation aircraft. So here is our flight plan for this explainer. First, we'll look at the core aviation insurance problem. Then how underwriters actually calculate your risk, followed by coverage based on your specific pilot type. After that, we'll break down the real costs and exclusions and wrap up with some actionable strategies to get you the best rates. All right, part one, the aviation insurance problem, navigating the turbulence. See, to standard insurance underwriters, general aviation is just a massive hazard. Many insurers actually sell off 90% of their risk to giant reinsurers, basically the 800-pound gorillas of the market, and they mandate some seriously strict guidelines. And that leads us to the dreaded aviation exclusion. This is a dangerous trap, and it's frequently hiding right there in employer-provided group life insurance, or those super quick policies you just click and buy online. It explicitly states that if you die in a plane crash, unless you're sitting in the back of a scheduled commercial airliner, the policy will not pay out. Zero. It essentially makes your life insurance completely useless for your biggest passion, leaving a massive hole in your family's safety net. In the real world, the second you truthfully check the box saying, yes, I fly airplanes, you trigger an aviation questionnaire. Suddenly, the insurer needs to know absolutely everything. Do you fly to remote locations? Are you out there test flying? How many hours did you log last year? It's basically the insurer's way of assessing your exact specific hazard level before they even think about committing to covering you. Moving on to part two. How underwriters calculate risk behind the instrument panel. So, how do they actually calculate that risk? Well, rather than just guessing, insurers pigeonhole you into premium classes based on some highly specific logbook data points. They want to know your exact license type, your total and annual flight hours, and exactly what make and model of aircraft you're flying. They are also definitely looking for red flags. Having an instrument rating generally improves your standing, which is great, while a history of FAA violations, DWIs, or flying into bad weather, yeah, that will drastically hurt your chances of getting a decent rate. Now, underwriters aren't just making these penalties up out of thin air. I was actually surprised to learn about the Society of Actuaries mortality data. It fills a huge 20-year gap in research, and it shows exactly how actuaries track fatality rates by flight type. The data revealed that extra mortality from aviation is typically observed in the early durations of a policy. It's this hard mathematical evidence that basically gives underwriters the green light to adjust your premiums based on what's in your logbook. Interestingly enough, there is an absolute sweet spot for underwriters. You might think flying more naturally makes you safer, but insurers are trying to balance your experience with your actual exposure. If you fly between 26 and 300 hours a year, you're generally in the best tier. Why? Because you fly enough to stay proficient, but not so much that your sheer exposure to risk just spikes. If you drop below 25 hours, they might view you as uncurrent. But if you climb over 300 hours a year in general aviation, your exposure rate is so high that most companies are going to slap you with a penalty. Okay, part three, coverage by pilot type, your specific flight path. These rules apply super differently depending on who you are and what's in your logbook. Take student pilots, for example. If that's you, you're facing the steepest premiums right out of the gate. Insurers just view low-time pilots as a major risk, so you'll almost always be charged an extra fee. But here's the good news. Hitting 100 total flight hours is the absolutely critical threshold. The very second your logbook crosses that magical 100-hour mark, your life insurance offers improve dramatically. Now, for our military aviators, your specific mission completely dictates your rate. Insurers recognize that not all military flying is created equal. A pilot flying a heavy cargo or transport aircraft often qualifies for standard life insurance rates with absolutely zero extra charges. But if you're strapped into a fighter or an attack aircraft, the actuarial risk just skyrockets. The jump in price is honestly pretty shocking. You're likely going to pay a heavy premium, sometimes an extra $750 for every $100,000 in coverage. On the flip side, commercial airline and cargo pilots generally secure the absolute best rates available because the scheduled airline fatality rate is just incredibly low. Underwriters absolutely love these applicants. But to get those top tier preferred rates, you still have to hit some specific marks. Generally, you need to be 30 or older, possess over 1,000 total hours, have 100 hours in your current aircraft, hold a valid medical certificate, and, of course, have a pristine FAA record. Let's move to part 4. Costs and exclusions explained. The price tag. So what does that price tag actually look like? Well, if you don't qualify for standard rates, maybe because you're a student or hey, maybe you fly a crop duster, you'll likely get hit with what the industry calls a flat extra. This is a flat penalty fee and it ranges from $250 to $750 for every $100,000 of life insurance coverage you buy. To really put that into perspective for a second, at $2.50 per thousand flat extra on a $1 million policy means you are paying an additional $2,500 every single year just for the privilege of being a pilot. Ouch. When you're choosing a policy and trying to mitigate those costs, you're often going to end up comparing AOPA Group plans against individual policies. Now, AOPA Group Life is super convenient, especially for young pilots, and famously, it has no aviation exclusions. But here is the insider catch you really need to know. You don't actually own the policy. The premiums rise every 5 years, and the coverage amount actually shrinks as you hit age milestones. On the other hand, an individual policy requires way more underwriting upfront, sure, but it allows you to lock in your exact rates for 10 to 40 years, giving you full, absolute control over the contract. All right, our final section, strategies for best rates, sticking the landing. So how do we actually secure the most affordable coverage? Let's break it down into steps. First, if you're a student, focus on building your hours past that 100-hour mark. Second, get your instrument rating. The data shows that an IFR rating proves your proficiency and can surprisingly save you over $9,000 on a 20-year term policy. That's huge. Third, just endure the life insurance physical exam. No exam policies basically force healthy pilots to subsidize the unhealthy ones, which results in massive premiums. And finally, perhaps most importantly, bypass the standard insurance agents and use a specialized aviation life insurance broker. Why go out of your way to use a specialized broker? Simply because they know exactly which companies don't just sell off all their risk to those strict reinsurers we talked about earlier. A good broker is going to steer you toward aviation-friendly places like Prudential, which is fantastic for experienced pilots, or Protective, which offers really great terms if you're a student. Banner Life is known for having some of the cheapest private pilot rates out there, and Pacific Life is a solid choice if you absolutely must go the no medical exam route. Ultimately, guys, life insurance isn't just some boring spreadsheet exercise. It's about replacing your income, covering your mortgage, maybe handling those flight training debts, and ensuring your loved ones are totally protected no matter what happens up in the air. Flying is an incredible career and an amazing hobby, but it definitely carries unique risks that require a solid, reliable financial backup system. So I want to leave you with this final thought today. Go check your current life insurance policy, like right now. Dig into the fine print of your employer's group plan or that cheap term policy you bought a few years back. Is there an aviation exclusion hiding in there? The absolute last thing you want is a hidden clause leaving your family grounded when they need support the most. Take control of your coverage, have a chat with an aviation specialist, and fly safe knowing your financial flight plan is totally secure.